Right now, while most people in the US are just starting their Friday morning, something quiet but powerful is happening in the financial world. Gold is moving closer to record highs, and almost nobody on mainstream news is explaining why this moment really matters. Just a few hours ago, fresh inflation data hit the markets, and it didn't land the way investors were expecting. Stocks reacted fast, bonds shifted, and suddenly gold started getting attention again. This is not one of those normal market days where prices wiggle and move on. This is one of those moments where the story underneath the numbers matters more than the numbers themselves. If you've been wondering why gold keeps rising even when people say inflation is cooling, stay with me. Because once you see what actually changed, you'll understand why big money is quietly repositioning right now. Before we go deeper, if you care about protecting your money, understanding market shifts, and staying ahead of financial headlines, subscribe to Bullion Alert HQ. We break down complex market moves in simple English, without hype and without noise. Now let's talk about what really happened with inflation and why the market reaction surprised so many people. On the surface, the data didn't look shocking, but the details told a very different story. Headline inflation showed some slowing, which should have been good news for stocks. But beneath that, core inflation stayed stubborn, and certain everyday costs refused to come down. Housing, services, and long-term living expenses are still pressing consumers. That's where the market started to feel uncomfortable. Investors were hoping for clear confirmation that inflation is fully under control. Instead, what they saw was a reminder that inflation is sticky, uneven, and far from defeated. That uncertainty is exactly where gold starts to shine. Gold doesn't need inflation to explode. It only needs confidence to weaken. The moment traders realized rate cuts may not come as quickly as expected, sentiment shifted. Stocks paused, yields adjusted, and gold quietly moved higher. This is important because gold isn't reacting to fear alone. It's reacting to policy confusion. The Federal Reserve has been walking a tightrope for months. Cut rates too early, and inflation could return stronger. Hold rates too high for too long, and economic growth slows down sharply. That balance is becoming harder to maintain. Markets are starting to price in that reality. Gold thrives when central banks lose flexibility. What changed this time is not just inflation data, but trust in future guidance. When investors don't trust forward projections, they move toward assets that don't depend on promises. Gold doesn't care about earnings forecasts or political cycles. It responds to long-term confidence, and right now, confidence is fragile. Another factor pushing gold higher is global demand. Central banks around the world have been steadily increasing gold reserves. This isn't emotional buying, it's strategic. Many countries want less dependence on the US dollar over time. When central banks buy gold, they don't flip it next week. They hold it for years. That long-term accumulation creates a strong floor under gold prices. Even small shocks can push prices higher when supply is tight. At the same time, everyday investors are slowly waking up. People are noticing that their money doesn't stretch like it used to. Groceries, insurance, rent, and healthcare still feel expensive. That lived experience matters more than official statistics. When people feel inflation, they look for safety. Gold has been that safety for thousands of years. Another quiet driver is geopolitical tension. Markets hate uncertainty, and right now, uncertainty is everywhere. From trade tensions to global conflicts, risk hasn't disappeared. It's just been ignored for a while. Gold acts like insurance against events nobody can predict. When uncertainty rises, gold demand follows. What makes this moment unique is that gold is rising without panic. There's no crash, no crisis headline, no emergency move. That tells us this is a calculated shift, not a fear-driven rush. Smart money often moves before headlines do. Many retail investors wait for confirmation. Institutions move on probability. Right now, probability is leaning toward prolonged uncertainty, and gold prices are reflecting that shift. Some people ask, isn't gold already expensive? That question misses the bigger picture. Gold is priced not just in dollars, but in trust. When trust weakens, the dollar price adjusts upward. Record highs don't mean the move is over. They often signal a new phase. In past cycles, gold reached highs, paused, and then moved higher as conditions worsened. History doesn't repeat perfectly, but it often rhymes. Another thing to watch is real interest rates. Even when nominal rates stay high, inflation eats into real returns. When real yields shrink, gold becomes more attractive. That balance is shifting again. As we move deeper into the year, more data will arrive. Employment, inflation, growth, and policy signals will all matter, but the tone has already shifted. The market is listening more carefully now. Gold moving near record highs is not an accident. It's a signal that the easy narrative is breaking down. a signal that long-term risk is being reassessed. If you're still watching, you're already ahead of most people. And this is exactly why Bullion Alert HQ exists. We don't chase hype, we follow signals. And right now, gold is signaling something important. As we go forward, watch how markets react to bad news versus good news. That reaction tells you everything. When good news fails to excite markets, caution is rising. Gold benefits from that environment. If inflation data continues to surprise, expect volatility and expect gold to stay relevant. Before we wrap up, I want to hear from you. Do you think gold has more upside from here, or are markets overreacting? Drop your thoughts in the comments below. Your perspective helps this community grow. If you found this breakdown helpful, share this video with someone who follows markets but feels confused lately. Sometimes one clear explanation makes all the difference. Thanks for spending part of your Friday morning with Bullion Alert HQ. Stay curious, stay informed, and I'll see you in the next one.